changes that are there and what we need to learn as businesses. So my name is Isaiah Gichana. I'm the treasurer for ASSEK, which is the Association of Startup and SME Enablers of Kenya. ASSEK is a membership organization with over 85 ESOs, that's entrepreneurial support organizations. And we work to ensure that the needs or the priorities of SMEs are promoted. There's a good knowledge, and that we are able to promote the entrepreneurial sector in Kenya. Now, with us to take us through the session will be Steve Mwaniki. Now, Steve Mwaniki is from the Kenya Revenue Authority. ASSEK has partnered with KRA, basically to support its members with the knowledge that they need to avoid penalties, to ensure that we have compliance, and to ensure that our businesses are working on well. So later we'll also be joined by Rachel Ndung'u, who is the treasurer for, who is basically the policy advisor for ASSEK. She'll also be giving us a few remarks towards the end. But if I look at what Steve brings to the table, he has so far 17 years experience and is a valued member of KRA, working under the domestic taxes department. So he brings in a lot of wealth, a lot of wealth of knowledge that is going to be able to share with us. He's an experienced tax trainer, and I'm hoping that all of us will be able to enjoy the session, more so to ensure how do we learn what we do with the knowledge that we have, and how does that affect our businesses. So you'll be having around 45 minutes to go through, and then from there, we'll have a session for Q&A. So my invitation to you is that we have got a chat area that you can be able to put your questions, so that now as we continue the learning, we can be able to raise questions and you'll be able to respond at the end of it all. Now, you'll allow me to get maybe one or two people to give us what the expectations are. So I can unmute, I can see there is somebody called Harrison Otieno. Maybe you can give, what do you expect to learn from this session? Okay. Harrison, are you able to speak anything? If not, we have John Chuma, if you're in.
Good afternoon, everyone. My name is John Juma. My expectation is just the general understanding and of the Finance Act, and also maybe other issues that might crop during the presentation, to have more vast knowledge. See, most of us still don't fully understand the small specifics of the Act. So at least this might be able to shed more light for us to understand more, so that, as you said, we avoid more penalties.
That's good.
Thanks,
Juma. Mariano Diambo, tell us something. What's your expectation today? You can unmute yourself and continue. Wow. Okay, if Mary is not in, could we have Edina Onyaji? Well, it seems all of us are wondering what this tax is all about. So I think the best thing that we can do is to give Steve the opportunity to be able to present to us, and then later we can have a Q&A. And they could be rest assured that we really are eager to learn, especially since it's carrying the amount of KRA. And we want to understand, how do we manage our taxes? How do we ensure we are good citizens? But how do we also ensure that there's good cash flows for our organizations? Because it's not easy doing business, and we want to retain as much as possible while complying with the law. So, Steve, the floor is yours. Welcome.
Hi, Isaiah.
Yes.
Rachel is in.
Oh, Rachel is in. Oh, okay. Yes. Rachel, you can have a minute to introduce yourself.
Yeah, thank you so much. Yes, thank you so much, Isaiah, for the opportunity, and they're very excited to learn about the Finance Act 2023. My name is Rachel Ndung'u. I'm a board member and policy advisor for ASSEK. Glad to have KRA work with us to help us learn, see opportunities, as well as identify what needs to be done in our businesses. So looking forward to the same. Stephen, I'm not a specialist in tax matters. I'm more into policy, but I did glance at just a few of the provisions. And a month ago, we had a conversation with our members and other stakeholders where we looked at the proposed finance bill, and we submitted our memoranda to Parliament. And gladly, some of our proposals were factored in. So just looking forward from a business perspective, MSMEs and startups, seeing the opportunities available, also educate us on what we need to be conscious about. I've seen bit of inclination towards manufacturing, in automotive, local assembly. Their income tax is reduced to 10%. Also, there are allowances and benefits given to players in blue economy, also in human medicine. So among others, reliefs or reduction in tax. A bit of queries around TOT, the turnover tax. It would be nice to hear from you. The threshold has been reduced from 50 million to 25 million. Tax rate increased from 1% to 3%. So just help us on how to go about that. That affects some of our MSMEs. On the startup part, we have that part of IP taxation around that. The tax rate has not really been defined. It would be nice to hear from your end, and whether it's to support us to supporting innovators and startups, to maybe hold on the IP other than exposing the same. So what will be the implication of that? And then on the employee allocation for startups, the tax deferment for a period of the 5 years, or when they dispose the shares, or when they leave the organization. That really touches on much of what our members do, because they work with startups, with the innovators. So anyway, a good move by deferring that. But if an employee is leaving, then it means they need to be taxed, and the assumption is that they're disposing their shares. So a bit of discussion around that from the employee perspective, just looking on the applicable taxes. For example, housing levy. Anyway, we've all discussed that. I think,
Yes.
everyone has discussed that, and you seem to be, professionals. And yeah, but it would be nice also to see around that. The increase on the pay-as-you-earn rate for those who earn 500 and above. It may affect a few people, but also good to hear from yourself on that. Those are some of the tax provisions I picked and that had been discussed earlier. And Obi, nice to hear from yourself. The promotion of the blue economy, auto or motor assemblers, And I'm just thinking those two will create jobs. They may also create opportunities.
Rachel, if I might have been, we have some 30 minutes at the end of the presentation.
Oh, okay,
so,
all
so
right.
that we don't trade us before we come. But thanks so much for that.
Yeah. So thank you, Isaiah. I think I will leave it. I'll hand it over to you. But an exciting discussion. Looking forward to learning more, Stephen. And thank you for being with us. Back to you, Isaiah.
Steve, it's your time. You can see the passion we have. We want to understand the act and we want to be compliant, but we want to hear from you what that means to us, really. So welcome.
Thank you. I hope you can all hear me loud and clear. Kindly, Isaiah, confirm if you can hear me loud and clear.
Yes, we can.
Thank you. So I have prepared a short presentation, though I have a few additions based on the act. But also, I will now do a short one based on specifically now the changes in now the different tax heads. So I have just tried to break it down into five. I'll touch a bit on now the startups. We'll now come to PIN registration and issues to do with returns filing. Then we'll talk about business income. If you are a startup, how do you start your business? What are your requirements in terms of registration in lieu of PIN? Then I'm going now to discuss issues to do with employment income, then touch issues to do with compliance, because we all drive into compliance. You remember KRA, we encourage a lot of voluntary compliance through now our tax regime, which is under the self-assessment regime. Now, allow me now to proceed. So I am basically interested in startups, and of course, in an event that you want to start a business, there are actually basic components that you may also need to think about. One is a PIN number, meaning this is a form of identification for tax purposes. And also remember, and also in our Tax Procedures Act, it even gives mandate on how a PIN is supposed to be issued. And also it goes further to illustrate what are the services that you will access in an event that you have a PIN. So of course, basically, this is an identifier for tax purposes, and also it is also used for other government agencies. So of course, a PIN, it can be a company, a club, or a trust. Now, remember now at the PIN registration, the commissioner is now mandated to register any person who accrues or intends to accrue a tax liability. So of course, after you get this PIN, the commissioner is expected now to ensure you as a registered person, according to the Income Tax Act, Section 52, now ensures that the commissioner expects you to actually file tax return. And also, remember also, the commissioner has a provision of 14 days, which you, in an event that you incur tax, you are supposed to inform the commissioner or do an application within 14 days. So these are just tax measures just to ensure that in an event that you intend to incur any tax, you are expected to register within 14 days. Now, of course, our basic mode of registration, it is through the iTax platform, of which this is not a new page. It is actually accessible on all platforms all across the internet. So of course, all registration and filing you have to access through the iTax. You just need your PIN and also your password. Of course, and under the red tab is when by you maybe need to apply for a PIN. This is where you'll actually need to go to now get a PIN. Now, of course, Section 8 of the Tax Procedures Act now ensures that one, if you intend to accrue a tax liability under income tax or VAT, or you expect to manufacture or to supply, or you also need to have a PIN number. Of course, now in an event now you now want to, maybe you formed a company and you want to supply your goods and services, you'll be expected to have a PIN, because the person whom you're supplying to, with now the current regime, is expected, you'll be expected now to issue them with a tax invoice, which is now should be ETIMS compliant. So that means that you're also expected to have a PIN. So according to our Tax Procedures Act 2015, it now provides mode of registration on how and when you will require PIN. Now, of course, remember we have numerous transactions that you need to get a PIN before now you access such services. This could mean that when you want to apply for a title, stamping instruments, for those that deal with shares, of course, you'll be expected to have a PIN. For those that also want to apply for a business name, or want to apply, let's say, a trade license from the county, you also need a PIN number. Of course, for now, those that are now doing sole businesses, you also need, before now you apply for a business name, you also need a PIN. Then lastly, the most common, when you want to open a bank account, of course, any financial institution will require you to have PIN number. Now, of course, these are just most of the services that we all know that you'll be expected now to get a PIN for you to access these services, be it in construction, insurance, and also under now the rental income. Remember now, when you apply for water and electricity, of course, this is where you'll be expected now to now come with your PIN. So these are just this ensures that now we have this information that will help us for planning purposes. So of course, in an event that you have a PIN, these are some of the common questions that now we actually get. So most people would ask themselves, why do we file a return? So according to Section 52 of the Income Tax Act, it requires, as long as you have a PIN, be it a sole, be it a company, be it any form of registration. There's a background noise, kindly mute whoever that is. So one, this means that the aspect of filing means that you're giving a declaration to the commissioner what you have done in the past 1 year. So of course, it is a state whereby you declare what has been earned for tax purposes through a tax return. If it is a business, you'll be expected now to declare your turnover, then claim expenses attributable to that business, then the balance, it is what that will be subject to tax. Now, it is important to ensure that you provide this information to the authority, because remember, section 40 of the Income Tax Act ensures that we KRA officers have the authority to peruse your books of accounts in an event that you have declared, and we have information that you have under declared. We have a provision of law to peruse your books of accounts. So when most people would ask themselves, why should you file a return? So as long as you have a PIN that has been generated from KRA, it is mandatory to file your return every financial year. That is why we do make a calling on the 30th of June, meaning that in an event for all individuals, sole, and also anyone who is not employed, remember that your tax period will end in, for example, for the year 2023, it will end in 31st December 2023, meaning that come 1st of January 2024 until 30th of June 2024 is when you'll be required to file a tax return. So I hope that is clear. And of course, these are just some of the returns that are filed on a monthly basis. One is now the income, returns like rental income, pay as you earn. They are actually filed on a monthly basis. So I will explain these ones further. So for income tax company, it is pegged on your accounting, and which is your accounting period. For example, now, if your accounting period ends in December, meaning that you have from January to June to ensure that you file your tax return, then declare your balance tax. Now, there are returns that are also filed monthly. One is turnover tax, which is filed on the 20th. Pay as you earn, it is filed on the 9th, or now close off the payroll month. So, for example, now in the month of August, apologies for that, sorry. So these are just some of the 3 returns that are filed every month. So of course, when you fail to file, there's an aspect of not the penalties. Now for all individuals, if you fail to file your tax, the penalty is 2,000 per year. And for those that are participating in rent, for all individuals, you are late in an event that you fail to file your taxes, the penalty is 2,000. And also for companies, it is 10,000 for companies. And of course, remember for pay as you earn, for those that have been given the mandate to now remit pay as you earn on behalf of now the employees, remember that now in an event that you find late, there is a 25% of the tax that ought to be paid, or 10,000, whichever is higher. So we'll look at whichever is higher. And also for companies, there are those that maybe file a return and fail to pay. So of course, when you fail to pay, you actually be slapped with a 5% of now the tax that you ought to be paid, and every month you default, it accrues 1%. So ensure that indeed you file your returns on time. So far, the turnover tax, for those that participate to file turnover tax, their the penalty is 1,000 or 5% of the tax, whichever is higher. So I know this is a bit punitive, but these are just measures to ensure that you do not default on your filing. Now, we move now to the business income. So, of course, remember, according to the Income Tax Act, which is our Bible, we refer it so much because now it now gives us the mandate to address issues regarding to tax. So, according to Section 3, it now clarifies in an event that you have a business, which is, it could be only in Kenya, or it could be in Kenya and partly outside the country. So for tax purposes, it will be deemed to be, now this income, it will be deemed to be accrued or derived in Kenya, because Kenya is where the main operations are actually derived at. So remember also in our jurisdiction, we have 3 categories that you can open up and start a company. One, as a sole proprietor, meaning that you can form a business name, then apply for your PIN, or meaning that you and the business will be one, or you can form a partnership, meaning that once you form a partnership, the taxes that will fall on the partnership firm will be paid by the partners themselves. Now we have lastly is now the company, or now the limited companies, meaning that the corporation rate is at 30%. And also there are those for foreign companies that come to invest and do the business within our jurisdiction. So their tax rate is at 37.5%. So of course, VAT is key, meaning that in an event that in any year of income you attain 5 million, meaning that you are eligible to apply for VAT, meaning that you automatically become a VAT trader. So of course, registration is done online, and you're expected to file every month. Meaning, if you are registered in the month of August, meaning you should be able to see your first return in the month of September before the 20th of the month, for those that have been registered in the month of August. So remember also, when it comes to paying, you can pay through bank or mobile money. We have partnered with over 67 banks just to ensure that you remit your payments on time. So of course, this is now, it is enforced through the VAT Act 2013, which is now the act that administers VAT. Of course, VAT is indeed, it is a consumer tax, and it is a tax on goods and services. So of course, remember that you are only expected to charge VAT when you are VAT registered. So in an event that you do not have this VAT obligation, it is an offense to charge VAT. So of course, remember, based on now the companies, this is now I'll now combine the two for time purposes. So remember, according to Section 3, any business that is derived, it could be rental, it could be agricultural, it could be in lieu of dividends and interest. As long as they're not qualifying, you are allowed, you'll be expected to declare their turnover. Then if it is withholding, you'll be expected now to claim that withholding as you're doing your annual returns and also declare them or whenever they fall due. So of course, there have been now some changes. Now for rental income, we have two regimes. We have monthly regime and we have the annual regime. So in an event that you have exceeded to 288 threshold per month, you'll be eligible now to onboard on the annual regime, or 15 million per annum, you'll be eligible for the annual regime. But if it's less, you'll be eligible for now the monthly rental income, which as per now, the Finance Act 2022, as it stands, the rate is at 10%. But now, come 1st of January 2024, the tax rate will be 7.5%. Now, for agriculture, meaning that in an event that you're into subsistence farming, remember that you're expected to have installment taxes. For agriculture, you have two, meaning that you have to pay on the 9th, the third quarter, which is now the 9th month, which is you will have to pay 75%, then the balance, which is 25% at the end of now your financial year. So of course, I have this is a review, meaning now for companies, the rate is at 30%. You remember back in 2020, April, we had the COVID rate. Now it was now repealed after. Now, due to now recovery from COVID, now the rate is at 30% for local companies, but for multinational or foreign companies, the rate is 37.5%. Now, of course, remember, in installment tax is key, meaning installment tax is whereby in an event last year you paid 110,000 worth of taxes. This means that now this financial year you're supposed to grow your taxes by 10%, meaning that you're supposed to now to divide this 110 into 4 equal installments, which comes to around 27,500, meaning that you'll be expected now to actually pay every quarter, meaning by the end of the year you'll have paid your installments. Then you will actually come to redeem them when you're doing your balance of tax. So of course, all this is done through the iTax platform. So of course, remember, for you to determine your taxable income, of course, you'll have to declare your turnover. Then Section 15 of the Income Tax Act allows you to expense expenditures which are related to the business. So of course, in an event that you claim expenses that are unrelated, we will actually do a return review. Then we will disallow and then slap you with an additional assessment. So ensure that when you prepare your books of accounts, ensure that you are truthful. Yes, now, of course, I've actually spoken on issues to do with now the penalties in an event that you default to file a company return. The penalty is 20,000 or 5% of the tax due, whichever is higher. And there are those people who file a return, also they forget to pay. So of course, when you fail to pay, there'll also be an interest that will be slapped on your ledger, just to ensure that you comply with the tax laws. So with employment income, of course, this is whereby you are an employer, and of course, this is also a method that tax is collected by those that are in gainful employment. So of course, which is paid every month. And of course, with the new Finance Act, there's been an additional of now the 32.5% for those that earn for 500,000 and above, and also 35% for those that earn above 800,000. So that is some new additionals based on the employment income. So of course now it is actually graduated, and of course ensure that when you declare on your PTN return, ensure that you actually declare relief for all employees. So currently it's at 24,000 per year, which is now 2,400 per month. I'm sorry, this is an error. So of course, who is eligible to deduct pay as you earn? This is key because it is the person who pays emoluments to an employee. He is required to deduct pay as you earn and remit to KRA. So of course, we actually do audit checks just to ensure that in an event that you have employees, you actually deduct and remit to KRA before now the 9th of the following month. Because remember now, for the month of August, you will now remit in the month of September before the 9th. So meaning now you have time to file that return and then pay before the 9th of the month. So of course, taxable income, it now sums all wages, salaries, sick pay, commissions, bonuses, service, gratuity, allowances, all. In short, it is all payments that are received in respect of employment income are actually fall under cash. They now fall under taxable employment income. So of course, remember now we have now the issues to do with mileage. So for mileage, the rates have to be in line with the AA. Of course, now this is now to ensure there is a standardized rate. So of course, remember back in the days, or clubs entrance subscriptions, they used to be non-taxable, but now they will be taxed on now the employee, and the employer will be able now to claim the expenses in lieu of now the clubs and also subscriptions. So of course, pay as you earn cuts across now the residents and also the non-residents. So it is tax which is accounted specifically for employers only. So of course, there are also other which are actually chargeable to now tax. Of course, this now includes housing, utilities, or in short, a car. When now your employer grants you a car, meaning that your car benefit, it is 2% of the value of the car per month, and he's expected now to add that amount as a tax benefit. So of course, remember we have people in our organization, in our spaces, who are able differently. So ensure that you encourage them to actually apply for this tax exemption, of which it's not automatically. There's a process just to ensure that there's waiting for fairness. So they are also allowed an exemption of 150,000 per month, or 1.8 million per annum. And of course, in an event that they do not consider these refunds, of course, the employers will be eligible to claim this refund. Now, of course, now we have now some allowable deductions, which is now the mortgage interest and also for pension. For, of course, in an event that you and an employee and an employer you contribute less than 20,000 per month, meaning in an event that you contribute more, the excess will be taxed. It will be added back to your taxable income. So, of course, we have tax reliefs, ensure that in an event that you have a policy for you, your children, and your spouse that they contribute, ensure that if the maturity is at least for 10 years, you are allowed to claim this 15% of the premiums up to 60,000 per annum. So this is just an incentive to reduce your tax burden. Now, remember also we extended this now to ensure that now in an event that you contribute to now NHIF, you're also allowed to claim now this NHIF in an event that you contribute to NHIF. And also remember also the Act has introduced now a new relief for now post-retirement medical fund. So in an event that you contribute to this fund, you actually be eligible to actually get this relief. Now, of course, now we have the monthly relief, which is given to all employees and also those that are in business. Ensure that when you find your income at the end of the year, you claim this insurance relief. Now, of course, I'll touch just a few issues in regarding of now the employment income. Of course, I mentioned now in an event there are issues to do with mileage allowance. So now the standard rates will be now have to be approved by the Automobile Association of Kenya. So they have some rates. Of course, you can actually read through the Finance Act to get the specific rates based on the CC rating of the car. Now, of course, I've mentioned now to provide taxation now for club entrance. So ensure that now this is now will be an expense to an employer, but a tax to an employee. So of course, this is just in line of just to ensure that we create a level of what fairness, and also remember that now these are now the new tax bands that now will be expected now to fall on your payslips. Of course, this is just a breakdown of what now we have based on now the new Finance Act 2023. So the rate is at 10 up to 35%. Now, of course, remember for penalties and interest I have mentioned for payers one is at 9. Ensure that indeed you comply to ensure that you're not slapped with a penalty. Now, as I wind up, remember compliance is about making the right declarations, including your returns, and you pay your taxes where they are applicable. So it also ensures that in an event that you are an individual, a company, or a partnership, meaning that you have to comply with all the tax laws. So of course, as you file your return every year, ensure that you actually apply for tax compliance, meaning that this now satisfy us that you have complied with the tax laws in that financial year. So of course it is issued based on request. It's not automatic. It ensures that you have filed and paid your taxes. Of course, this also ensures that compliance, we monitor your books of accounts in the event that you default. Either will give you a call or will actually write to you an email just to ensure that you are consistent in your filing, just to ensure that you avoid your penalties and interest. So of course, I always ensure that I repeat this to ensure that in the event that you have a PIN, ensure that you file your returns annually, just to ensure that you do not fall prey. In an event that you have rental income, please comply by filing your returns every month, or you will actually get to have a penalty of 2,000 as an individual when you fail to file your monthly rental income. And for a company is 20,000 per month. So of course, for pay as you earn, it is 10,000 on to 25% of the tax due, whichever is higher. Now, for a company, ensure that now you file and pay, because now when you fail to file, there's an aspect of penalty. Now, for those that are for filing for turnover tax, so currently the rate is at 3%, and turnover tax is a monthly return, and it's expected now to just compute the sales of the month. Then the tax rate is 3%, and indeed it is a final tax. So at the end of the year, in an event that you do not have any other income, you are allowed to do a nil return under the annual income tax regime. So of course, that marks end to now the first segment. Allow me now to take 5 more minutes to actually do a mop-up of now now the issues that have been added through now the Finance Act. I will be brief just to ensure that I keep time. So of course, remember now we have now this Finance Act has now amended the Income Tax Act, VAT, Excess Duty Tax Procedures Act, and all other acts which are now in place. So of course, some of the effective dates would be 1st of July. Some will actually be effective in 1st of September, and some will be effected in 1st of January 2024. So for amendments of now the rental income, the 7.5 will take effect on January 2024. And there are those that have already taken effect. One is now for July, is now the new tax band, and also the affordable housing. It has already taken effect for since 1st of July to 2023. So of course, one we have is now withholding for now of now the residents. Of course, there's an aspect of withholding. So in an event that it has been paid to a non-resident, it is indeed a final tax, and also it shall not be refundable on issues to do with audit when audit adjustments have been made. It will not be refundable. Now, of course, now they have lowered the threshold of turnover tax from 50 million to 25 million, just to ensure that now more people on board. And of course, there is now the increase of 3%. So of course, in lieu of section 35J that now concerns now the withholding, now they have introduced some additionals in lieu of now sale, promotion, marketing, advertising of residents. Now it will be at 5%. Now, of course, for digital, for mostly for residents, it will be 5%. This is now the digital content monetization will be at 5%. Of course, this is effective of 1st of September 2023, and of course for 20% for all non-residents. And of course, remember now for rental income, there's an aspect of now the withholding rent agents that shall be appointed, meaning that they'll be expected now to, in an event that now they receive rent, they are expected to withhold within 5 working days. Of course, they'll be expected now to remit to the commissioner. Now, of course, tax for a residential has been based on now the following year to 2024, the rate will be reduced to 7.5%. And also the Act has introduced or has added mortgage refinancing for mostly companies and circles that will now be able now to issue a mortgage, and you, as in an event that now you take this mortgage, you'll be eligible now to claim this relief in lieu of mortgage. And of course, I've explained the issues to do with now the new tax band that now is at from 10% up to 35%. So of course, this took effect in 1st of July 2023. Now, of course, for VAT, of course, there's a deletion of now the 8%. Of course, now for LPG, it is now exempt, and of course now for petroleum is now under the standard rate. So for LPG is now at 0 rates. Of course, clarifications of now the DST. Of course, now we had issues with now the turnover, but if you participate under digital service tax, you are eligible for VAT. Now, in an event that you had an insurance on your stock, and you happen to, maybe the goods get destroyed in the warehouse, so that compensation will be taxable because it is inclusive of now the tax. Now, of course, remember now I've spoken on issues to do with now the turnover of suppliers of now the digital service. Now they don't have to meet the 5 million threshold on VAT. Now, lastly is now exemption of now the aircrafts. Of course, ensures that we now promote the industry, and of course now exemption of now the local plants and machineries. Of course, this is in line of now the new assembly plant of now the Toyota that was launched in Mombasa. So of course they enjoy that exemption from VAT. And of course, now the school feeding program, just to ensure that in an event these suppliers are made to now support the feeding a program, of course, with approval from now the CS, they will be exempt. Now, of course, remember now the commissioner has now, there's now that a provision to adjust now the rates of now excess duty. So that provision has been deleted, which now allowed the commissioner to adjust the rates of excess duty. Then, of course, there's also sufficient time to ensure that in an event that you have issues to do with an excise license, now you have time to have 30 days to ensure that you can be had in lieu of if you have issues with suspension of the excise license. Now, of course, there is an introduction of now to ensure there is now a penalty where when you possess goods which have no stamp, or you have possessed goods with fake stamps, there is now a penalty. Now, of course, ensures that in an event that now you participate in betting and gaming, in an event that now a transaction has been done, meaning excess duty has to be paid within 24 hours. And of course, now this now ensures that now all licensed manufacturer of alcoholic drinks, meaning that they have 24 hours to account for excise duty. When they remove now their goods from the manufacturing store. Of course, now excess duty has been exempted from now electric motorcycles, just to ensure that we boost now the demand and to open the market. Of course, now in an event that you import plastic, they now attract excess duty. Initially, they were not excisable, but now they attract excise duty. So, of course, and then there's also they have now exempt now in an event now you intend to create a local assembly to manufacture more phones. Now they will be exempted. But in an event that now you import, there's now a rate of 10%. So, of course, under the TPA, of course, there is an issue. They've now introduced now the amnesty, which now ensures that in an event that you have any principal tax before 31st of December 2022, you will enjoy another amnesty. Now, remember now, the commissioner has now the mandate now to appoint a rental tax agent to collect rent on behalf of the commissioner. Now, of course, remember now to on issues of refund and overpayment. Now you have a right to utilize any payment that you have accrued to now offset other liabilities. Now, in an event that you have an overpayment of tax, you have 6 months from the date of ascertainment to actually apply for that fund. Then, of course, remember now you have 120 days to ensure that that now the commissioner is required to respond in issues to do with objections. Now, remember now in an event that you have withheld of course, you have 5 working days to ensure that you actually pay that withholding. So lastly, of course, now the commissioner has now 7 days to request now the taxpayer in lieu to confirm whether the objection has been done correctly. So meaning the commissioner says when you apply for, when you object to a decision, the commissioner has 7 days to confirm whether you have applied the objection correctly. So that is just a brief of now the some of the changes that have affected now the acts, and also just to ensure that in event that you are in in an enterprise, ensure that you follow these issues to do with now the amendments, just to ensure that you encourage maybe your business partners, if maybe they're not onboarded on teams for VAT purposes, it is important because now the law has been amended to ensure that any expense that has been incurred in a business, you'd have now to expense it through now the teams module to ensure that now there is an aspect of fairness. So that is the end of my presentation. Thank you.
Well, thanks, Steve, so much for that elaborate presentation. I'm sure the members have enjoyed, and I can also assure that more questions have been raised. But the good thing is that I've seen you'll be sharing the presentation with the members so that they will be able to go through at their own pace. So as we go to the Q&A session, you'll give me a moment to bring in Rachel, who respond. And then from there, we can go to Steve, who has quite a number of questions that is going to address. So Rachel, if you're around, you can unmute yourself.
Yes, I'm good.
Yes, now that Stephen has really given a very wide presentation of this, what do you think is going to be the impact of this act among businesses, especially the startups? Because at the end of the day, we want to see where does the rubber meet the road.
Yeah, thank you, Isaiah. A very good question. Being an entrepreneur, I think it's just time, and it's good that as Kenyans, we are talking about the Finance Act 2023. Well, you know, this has been happening every year. So that's a good thing in itself, and we are involved ourselves as ASSEK. We were also involved in public participation, and we did our submissions. So I think from a business perspective, there's need to understand the tax provisions.
Mm-hmm. Yeah, you've gone mute. Okay. I think, Steve, you should pick it up even when she comes back. I think then I'll be able to give her the chance again to continue. Steve, you are in.
Thank you once again.
Yes. So Steve, the other different question for you, and I've got one of our members.
It's just
oh, good. Okay, she's back, so we can give her the time. Okay. Rachel?
Yeah, sorry, it knocked me out. So just looking at those aspects, and this now needs to be part of what we do. Definitely, there'd be an increased operational cost to businesses. But I also see opportunities, especially within our ecosystem, in areas where there is better tax, there's tax provisions that encourage innovations around that, like Steve talked about pharmaceutical industry. I saw also in blue economy, you know, an industry that we've been talking about. So hopefully we'll see some key innovations around that. Housing as well. I would expect that MSMEs would benefit through job creations. And they will be involved. I've seen a few to have MSMEs provide certain equipment or facilities for the housing project. So I hope that then creates jobs for MSMEs. I think that's what I would say at this particular moment. Yet to see the provision around shares to employees for startups. Really, still not very sure whether that's would benefit much, but I would be happy also, Isaiah, to hear from yourself and possibly Steve, and a number of us would be wondering. So the taxation on those shares has been deferred to 5 years, or even upon exit. Some employees work for a certain startup, or for a longer time than 5 years, or in case of some leaving, then how does that play? The other part I would appreciate also to hear from Steve is around IP. So there's a provision now. Capital gains from IP would be taxed. I'm not sure whether it's 10%. I may need to check on that. Encouraging people there not to dispose, to keep their IP. So it would be nice just to hear from Steve around that, in case the provision now has taken effect. I think that's just what the comments I would make at this point. Thank
Just
you,
as a follow-up to what you have said,
yes,
we are not seeing KRA and the government being quite efficient in collection of taxes, both in volumes and also in the time, the turnaround time. How do you see that impacting the Kenyan economy in the long run, and also by extension, the entrepreneurs?
I think there's quite a bit of awareness, in my opinion, increased, and hopefully Stephen would comment on that. So we are actually even talking about it. If you look at social media, like even KRA have a hashtag Elewa Finance Act 2023. So there's a discussion, and I think that's a good move towards the right direction. So as talking about it and seeing how it affects us at a personal level. If you're an employee, you're thinking now, my taxes have increased, my deductions have increased. So it's now hitting home. If your business, then your operational costs have increased. You can see even marketing, advertising, this a withholding tax of 5%, meaning that increases doing business. In terms of collection, I may not be the right person to answer the efficiencies around that. But we also seen the government automating, doing a bit of automation. And so maybe Steve would comment on that. Thank you, Isaiah.
But for sure we'll be holding them responsible, because the truth is there's a lot of money being collected, and then we can hold the government responsible for providing services, which then falls under the mandate of ASSEK also, as it pursues to ensure that the needs of its members are communicated to the government, so that as the economy improves, as the operating environment changes, then we are likely to be able to see more successes in business, entrepreneurs growing, and that will be good for us all. So, Steve, if I may ask you a few questions that have come from the members. Thank you, Rachel, for that input. We really appreciate. Steve, if I may ask you, there's one of our members who wants to know, the difference between the VAT and the corporate tax. So if you're paying the 16% VAT, do you still need to pay corporate tax here?
Thank you for that question. Remember, VAT is 16% proponent exclusive of your price, meaning that you're selling your commodity, you have your input, you have your profit, and then you add 16%, meaning that 16% is now the element regarding VAT. Now, what you now declare is now your turnover based on your sales. Meaning now at the end of the year, you will come and say you had a turnover, let's say, of 500,000, then you incurred your expenses. Now whatever will be subject to your taxable income will now be your profit. So there is a clear distinctive between VAT and corporation tax.
Yeah. So in essence, what you are saying is that for the VAT, entrepreneurs or businesses act as agents. So still you need to do what? To pay tax on your income at the end of the year.
Yes.
I hope. Yeah. Thanks so much for that.
Remember,
now
sorry for that. Just a clarification. Remember, for you to charge that VAT, you need to be a registered VAT agent or what we call commonly known as a VAT agent, meaning that now KRA has given you the mandate to charge this 16%. So meaning this 16% is not your income. It is now money that you're supposed to collect for the government. Yes. Thank you.
Thanks a lot for that. Now we have what 1 year, you have a company, you have ceased operations, but the PIN is still active. What do you do to avoid penalties?
So one, remember, as long as that you have a PIN, whether you have chose to close the company, literally you could have closed that shop. But remember, as long as the PIN is active, we will not know whether you have closed this shop. So what you're expected to do, you're supposed to now write to the commissioner within for 14 days in an event that you have closed this shop. And then you'll actually start, you now have to go to the registrar of companies now to start the process to ensure that now you close the company. Then after you close in a company registry, now you can come to KRA, then you apply for cancellation. When you apply for the PIN cancellation, we'll actually do an audit to see whether if you have any balance of tax. If you have any balance of tax, you pay, and then the PIN is approved, then the PIN will be cancelled. Yes, just to ensure that you have closed your business and you have closed your PIN. Because many a times we see people saying that they stop to trade. But when you stop to trade, did you notify the commissioner that you stop to trade? Just ensure that in an event that you stop to trade, you ensure that you notify the commissioner. Thank you.
So that's very important, because most of us normally close our companies, we open another one, we forget the other one and say we are not ready. But you have had now the right process that you still need to notify KRA and also go to the register of companies so that you can close it also. And you need to expect an audit, because every part needs to certify that the things have been done properly and the right way. Thanks, Steve, for that. Now, we have a situation where one of the directors has resigned from the company, or a partner has also moved out of the company. What happens? Should they also resign at the office and that ends, or what steps should they be able to take?
So one, let's say in an event that a company or a director leaves the company, one, they'll need to notify KRA, and also they'll also need to notify a company registry for audit purposes. Remember, there are people who leave the company, but they don't follow the due procedures. So in an event now, this company maybe commits fraud. So we'll actually go to unveil who are the directors at that time to ensure that they take responsible of what has happened to the company.
Yeah.
Yes.
Okay, thanks. We have one or so who applied for the ASRA fund, but the PIN is bringing problems. What could be the problem, and in your best estimate, and what could that person do?
So based on the Hustler fund, that is I'd be interested to know whether they've applied in lieu of a company, or what is the entity, or if there's a concern, I'll be able to pick it up. Then I will follow it up to ensure that they get feedback. Yes.
Okay. So that one we can arrange for them to get in touch, and then you can give them a more custom response on that. Now we have got a situation where income is less than $1 million annually. Do you still pay turnover tax? And this could apply to quite a number of people. Yeah. What's your comment in that case?
So in an event that you'd from my experience, if you fall short of income tax, or if you fall short of now the turnover, you need to write to the commissioner to be requested now to move to the annual regime, just to ensure that we do some monitoring. Because when you fail to now declare the turnover return, we will do like a follow-up to ensure why have you defaulted. Because you realize many of us, when we default, when we fail to maybe when we change from turnover tax to the annual regime, we never notify the commissioner, because remember, once the system acknowledges that you're supposed to file on a monthly regime, meaning that you have to apply for cancellation of that obligation, just to ensure that now the system ceases to expect a return of that obligation. Yes. So
okay. If one is getting an annual income of around 700,000,
yes,
do they still need to register for that obligation, or
well,
they can relax?
I would say turnover tax is voluntary. You may opt to continue, or you may now choose to write to the commissioner now to remain under the annual regime.
Yeah.
Yes.
Okay. I think that's part of what we have come from, member. But also the other thing that we still wanted us to really understand the treatment of shares, because most of the entrepreneurs and startups, there's this element of shares. What's your take on that? And how can the SMEs really work on it so that it's beneficial to them?
So based on now the shares, let's say you've ceased to become employed, and then you have maybe earned shares from now the company. So they will be deferred to when now you now exercise them. That is when taxation will apply, because it will be deemed income for you to now exercise when you now maybe transfer these shares to a party. Maybe now you may choose now to liquidate those shares, so they'll be subjected to now pay to taxation at that point. Deferring means that there is a provision that we know that once they're deferred this year, they can take up to 5 years for now you to actually dispose or now to liquidate them or something for you now to earn from those shares. Yes. Yeah.
Now, I think one of the people raised the question regarding when you don't make income of 1 million, what you do, maybe you can go over that again. I think they didn't get it clearly. So maybe you can go over that again.
So in an event that could be this, this could be, let's say it is your yearly turnover. So if it is based on an annual turnover, you'll be expected now to declare it under the annual regime. Then you are also allowed, if you are an individual, you'll be able now to claim expenditures. You'll be able now to claim your insurance relief or any other relief which is attributable to that income. So it is also a benefit. So meaning that, but now, for instance, if this income is earned, you know, for you to participate in TOT, we look at now the cumulative turnover. It is not based on a turnover that has been earned in a month. It is based on accumulation. Yes.
Okay. I hope that now clarifies. We have got one of our members who wants to, they have a bookkeeping software, and they want to integrate it with A-Teams. How would you be able to assist them on that?
So in an event that you have your own billing platform, you can now request for the module called OVS, which is an integrator, or now you can now come on board. Then we will offer a platform for you now to integrate your billing with our teams to ensure that now when you generate an invoice, it is just based on the same line of operation. So I will actually leave the contacts on the chat just to ensure for those that want to maybe get assistance regarding to teams, they'll be able now to get in touch with now the teams.
Yeah, that's good.
Yes.
Now, there's also a situation where an employer pays pension contributions. At what point does it become a taxable benefit to the employee?
So in an event that now it becomes when it's when for example, now you contributed, which is any amount which is above the taxable limit. I mentioned if you contribute any amount which is less than to 20,000 per month, it is not subject to tax. But then at the end of the year, remember when you finish when you finish that contract of service, you'll actually get to receive lump sum, right? No. So for when you receive this lump sum, the first 600 will be exempt, but the balance we will subjected to tax.
Tax.
Because when you're paying it was not what taxable. It was you earned a relief out of it. So meaning it is an income that you are building throughout your terms of service. So once you retire, you receive lump sum, which is income that you're earning. Yes.
Okay. Then something also that you see, one of the observations we have made is that entrepreneurs get a lot of this knowledge. They know the VAT is changing. They know the turnover tax is changing.
Yes.
How do they operationalize that? How do they get to the iTax platform and start doing this? What's that link that you can comment on? Because getting the knowledge about, we know we need to pay this tax is one thing, but knowing when and how to do it is another thing. How could you tie that one up?
Okay. First and foremost, this material is on our website. You just need to go to kra.go.ke, go to publications, then you go to taxpayer education. You'll be able now to get materials of now on the tax rules. Now, for example, for turnover tax. For turnover tax, you can apply through iTax. What you just need to do is you log into your PIN, go to registration, go to basic information. Then it is just a checkbox that you click, and you are onboarded on turnover tax. Or you can now, if you have a smartphone and it is a Android smartphone, you can go to Play Store, search for M-Service app, download, then install. Then now you can apply now under registration. You can now apply for turnover tax. And the beauty of let's say using the app, it is simplified. You can pay through the phone. You don't need to go to a machine or a cyber to actually pay turnover tax. Yes.
Okay. I think the content you have brought on board is quite important and useful, so that now it enables us as members to interact with KRA. Steve has told us we have the website, and when you have got a doubt, you can always go to the website and be able to get more information from there, in addition to him sharing this presentation. So we have got quite a lot of information that has come through. So thanks, Steve, so much for the time that you have given us, for the content you've given. I think it's quite elaborate. And when I look at the chat, I can see we have covered all the questions. So we are almost coming to the end. I don't know, Edith, if you have got anything to add, then I can welcome Rachel to give us the party shot. Okay.
First, 1 minute. So on the website, you just need to go to kra.go.ke, then go to now the publications tab, then under tax education, you'll be able now to get all the materials that you need. If it's a guide, if you are a foreigner, you need to come and invest, and if you want anything to do with iTax, they are all materials that you can get just to ensure that you are informed. And also the materials have our contacts that you can be able to reach us, and also remember to follow our page on Twitter, which is KRA Care, of which we do post most of these invitation and content to forums that we train every month, just to ensure that you build capacity in terms of your area of speciality. Thank you.
Thanks a lot. So Edith, you have something to say, or I give it to Rachel to close for us?
Hi, Isaiah. This is just to echo that we'll be sharing the PPTs, open presentations, once we are sending out the recordings, even for those that didn't manage to attend. So those who are inquiring about that will be done.
Okay.
Yeah, I think that's it.
Thanks a lot. So over to Rachel, our policy champion, to close it for us. And thank you, members, so much for turning in numbers.
Thank you, Isaiah. Yeah, thanks, Edith. Thank you, Isaiah, for that engaging discussion. It didn't feel like 90 minutes, much appreciated. Isaiah is a board member and treasurer for ASSEK. We serve with the board together. And to our secretariat team, Edith, I can see Mutua with us. I don't know whether Brian is here. Really, thank you so much for putting this together, and also our CEO, Masiki Malat, in absentia. We're really grateful. And to our presenter for the day, Stephen Mwaniki from KRA Tax Expert. Really, thank you so much for making time to come talk to us, educate us on matters taxation. And also, we are grateful to KRA for agreeing to hold such similar conversations with our members and the ecosystem players outside Nairobi. So we are very grateful. We'll continue having this, just ensuring that our members are educated. And where we need to also share input from our members on tax matters, we'll also be doing the same, Stephen. So expect to hear from ourselves where we think certain tax provisions can be improved to support our members. So thank you so much to our attendees, participants. We are very grateful for you making time to be with us. Please, after this, feel free to share your feedback so that we can keep improving our policy dialogues. We'll continue also having this. I believe all of us have subscribed to our updates. You may also follow ASSEK social media platforms so that whenever we have these forums, then you get to be informed. So thank you so much. I wish you a good evening from all of us here at ASSEK. It's a big thank you and a good evening. Bye-bye.